Hello there. Welcome to the Great Golf Accounting. In this video, I want to look at a common test of March 2024, and we are going to look at a question paper from the province of KwaZulu-Natal. So, going to our question, we're going to create our statements. And our question is with 45 marks. It requires you to spend on average 40 minutes on the question. So, we've got a question on MGM Limited as a company. And the question is written information relates to the financial year ended on 20th February 2024. What the required part with what the first part is contained one, which is retained income note on 29th February 2024, and the part is 10 marks. And I'm going for 1.2, prepare statement of financial position for the year ended 29th February 2024, and we have got 35 marks for that section. So on the notes, it's 4 workings, second figures are provided in example. So workings are required, so very important to take notes. And all the information, you're given a list of balances before taking into account or adjustments below. So you're given it in the form of a list of balances for 2022 and 2023. So according to our question, you'll see that we are just going to adjust these names. These years are to 2023 year, and then in this column we are using 2024. Consider that our year is ending on 20th February 2024. So it means this is now representing 2024 and we have got 2023. So basically, and that's what we have. And then we're given this information B, which is what shares and dividends, which we also need to go through before answering the question. We have also information C on loan. So I'm going with our question. We also have a D, rented income, E, director's fees, F, provision for bad debts, and G, we put data's control information, H, trending stock, I, we have got SARS income tax, and then J, they are given the following financial indicators were calculated on 29th February 2024 after taking the above information into account. So we've got some financial indicators that we are using in terms of current ratio, net asset value, earnings per share. So this is the last part of our question. In other words, we put the last information on this part. So we go back to our question and try to look at our first requirement that we have in the question, which is at the retained income note on 20 February 2024. So we go to our answer section, see that this is our retained income note that we are going to look at. And for the first part, we are going to have our balance at the beginning. So obviously, we are going to start with balance at the beginning. Right, so we try to find out about balance at the beginning. I come to the question. So if we come here, you see that it changed income that is April 2024. We are given the trade income for 2024, which is 2,500,000. So this is at the end, but the balance that we want is at the beginning. So according to our balance at the beginning, supposed to be in this column, but it's a question mark here. So it means we have to find about that balance. So basically, but if you look here, we have watched an explanation which says a list of balances before taking into account all adjustments below. So it means the balances that we are using here, we have no adjustments of the information B to the last information. So basically that's what it means. So it means we need to find out any information that can lead us find and balance at the beginning, and that is in the column for 2023. So but if you look at information B, it reads, if you look at on 8 February, 8 February 2024, it reads 50,000 shares were repurchased at $1, 1.50 above the average share price. This transaction was properly recorded. So basically, we have 50,000 shares which were repurchased at 1.50 above the average share price. So basically, we need to find the value that is above the average share price. So basically, but we are told that it's 1.50. So basically, to find the value, we are going to say 50,000 times 1.50, and you see that you're going to get your 75,000. So this is the value above the average share price. But on the next sentence, it means this transaction was properly recorded. So this is opposing what we are being told here by saying this will balance before taking into all adjustments below. So it means this 2,500,000, this transaction was taken into account because here we've got a notice saying this transaction was properly recorded, which means it was adjusted for us to arrive at 2 million 500,000. So basically, we can now try to go back so that we can find the balance that we have at the beginning. So basically, we know that the price above the average share price, when the repurchase is taking place, is supposed to be adjusted as a negative in the retained income note. So it reduces the retained income balance. Remember, it means to arrive at 2,500,000, we had subtracted 75,000. So we need to add it back so that we get back to the figure that we had at the beginning now. So basically, we are going to say our 2,500,000, and then add our 75,000, so that we can get advance that we the beginning. Remember, we're saying this 75,000 was subtracted for us to arrive at 2,500,000 because here this transaction was properly counted. Then if you get the two, you're going to get 2,575,000. So basically, that's what we. So this is the balance that we had in the beginning. So we're just going to summarize the working. Remember, question, there's an emphasis that is there that show working. So obviously, this working that we have here, we are supposed to show it in the answer section. So we come here. So we are going to say in brackets, we have 2,500,000, and then we get 75,000. So if you calculate it like that, you'll see that the answer that you are supposed to get is now 2,575,000. So that becomes the balance at the beginning. And remember, after balance at the beginning, we are supposed to add net profits after tax. So here you say net profit after tax. So for net profit after tax, we need to go to the question that we have and try to find out where can we find the net profit after tax. So we can go through every information that we have, starting from information A, and I will start to look at the list of balance that we are given if we have got net profit after tax, but you see that there is nothing. So you can go information by information, trying to see if we have got net profit after tax that we are given. Know that from there, let's go into information D. We try to go down to see if we have got net profit after tax. So see that we have got nothing. But if you come in the additional information, it's J. We are given we can use these financial indicators to find net profit after tax. Remember, we have a net asset value per share. Net asset value per share. Remember how to calculate the formula that we use to calculate net asset value per share. So you would see that the formula or net asset value per share is it is equal to shareholders' equity over number of shares. So basically, I would see that this one is not, you don't have any net profit after tax. Remember, you're looking for net profit after tax. When you look at earnings per share, remember, the formula is net profit after tax divided by number of shares. So basically, that's what we are going to use to calculate our net profit after tax. So we can just refer back to the information that we have. And we use this earnings per share, which is now 120 cents. Obviously, we can simply convert your 120 cents to rands, whereby you're going to divide by 100 cents, and you're going to get 1.2. 1.2 will be the representation of your earnings per share. So basically, we are saying the net profit after tax is the one that we don't have over number of shares. The number of shares, we can go back to the question trying to see what number of shares do we have. And obviously, this will be number of shares, and we are seeing 800,000 shares for 2024, which is at the end of the year. So if you come back here, so if you calculate like this, you're supposed to get your earnings per share that you're given here. So we need to say it's equal to 1.2. So basically, as simple as that. And then now we can make profit after tax and the standard in the formula, whereby net profits here is 1.2, and you're saying whereby it becomes net profit after tax, supposed to 1,800,000 times 1.2. So obviously, if you calculate like that, you are going to get your answer is 2,160,000. So this is the calculation that we are just going to summarize in your answer section, whereby you say net profit after tax in brackets, we quote it by saying 1,800,000 multiplied by 1.2. And obviously, this is 1.27. So if you calculate there, we got 2,160,000. So here we are saying our answer is 2,160,000. So basically, that's what we get to net profit after tax. And remember, we add net profit after tax, so we can show the figure as a positive. Then from there, we have got the buyback shares that we are now readjusting them. Remember, I said it's 150, and we did calculate the value of those shares, and that is with the price above the average share price, whereby we said 1.50 times our 50,000, and we got our 75,000. So this is the value that is above the average share price. And remember, we said that value you're supposed to subtract it in the retained income note. So if we come back here, we readjust it and say buyback of shares. Remember, we are supposed to show that as a negative. Remember, we got 75,000 for USA, 75,000, and we show by putting it in bracket dividends. We are obviously under dividends, we are supposed to first list the interim, and then we have the final. So for the interim, we can just try to refer back and see what does the question say about interim dividends. So if you come here, you see that interim dividends, we are given them on 1 September 2023, interim dividends of 40 cents per share was paid. So we are just going to use our 40 cents, but they were paid on 1 September 2023. So basically, the 1,800,000 shares were shares that we had at the end of the year. We had 1,800,000 shares at the end, that was on 20th February 2024. But you see that we needed the number of shares by 1 September 2023. That is when interim dividends were paid. So we need to calculate back by saying on 8 February 2024, that was after 1 September 2023, there was a repurchase which took place. And remember, a repurchase, it's a subtraction, it reduces the number of shares that are in issue. So obviously, after subtracting 50,000, that was repurchased, we got to 1,850,000. Oh, sorry, 1,800,000. So to go back to the balance that we had for number of shares on 1 September 2023, we are just going to say 1,800,000 plus the 50,000 that was subtracted, which is this one. So there were no shares that were issued that we can subtract. Remember, there's an individual saying no new shares were issued during the financial year. So if there were shares that were issued, we're supposed to subtract the number of shares that we get the balance that we had in the beginning. So from here, you're going to get your 1,850,000. So this is the balance that we have. So this is the figure that we're going to use to calculate for interim dividends using 40 cents. So basically, we're going to say 1,850,000 times 40 cents, which is 0.4 is a decimal. So you go to your answer section. We are saying in brackets, we have 1,850,000, and then we are going to multiply by 0.4. So we calculate it like that, you're supposed to get your answer is 740,000. And then obviously we have final dividends, which we refer back again to see what does the question say about final dividends. But we are told that a final dividend of 60 cents, we have got a final dividend of 60 cents per share was declared to all shares on the share register on 20th February 2024. So this is now in the end. So in the end, we had 1,800,000. So very simple. So we're just going to say 1,800,000 times 60 cents, which is 0.6 as a decimal. So we come here, we say for final, we get 1,800,000. We multiply by 0.6. So the answer that you're supposed to get there is 1,080,000. So we're saying 1,080,000. and 80,000. So basically that's what we have here. It's times 6, 6.0, 6.60, which is 0.6. Here we are supposed to just calculate 1,800,000 times 0.6, and then you get to 1,080,000. So basically that's the calculation that we have there. So from there we can now be able to add our dividends, but we get total dividends. Here we're supposed to come here by saying 740,000 plus 1,080,000. We're going to get 1,820,000. So here we're going to get 1,820,000. So basically we can close here so that we have ended there. So that's what we have. Then from there, we are saying the figure that we are having there for 1,820,000 should be shown as a negative. Because we are now saying 2,575,000 plus 2,160,000 minus 75,000 minus 1,820,000. And then the final answer that we are supposed to get is what? Is retained income and balance at the end. We can just try to calculate them. It's 2,840,000. So here we put 2,840,000. And basically this becomes the final answer that we got there. So from there, we can now give a description in terms of our final figure that we got there by saying this is going to be the balance at the end. So we can just give a description by saying balance in the end. So basically, that's what we have in terms of our trade income note. And remember, this figure for 2,840,000, we are going to use it in the statement of financial position. Then from there, we go to the second part whereby we are now going to the preparation of the statement of financial position on 29th February 2024. So basically, this is what we have. Go back to our question. So that the next question that we have is a preparation of a statement of financial position for the 29th February 2024, and it's got 35 marks. So obviously, for the statement of financial position, we are going to start on the section for our assets. And for assets, obviously, we have our non-current assets that we are going to start with. And go back to question, try to find out about the non-current assets, which are the fixed assets. And you see that we're having a fixed assets is question mark, which means we don't have the figure for non-current assets. So basically, when it's like this, it means we are going to find this figure as a balancing figure. So we can leave it blank. But we also have fixed deposits, which are given as 1,200,000. But of course, before you enter that figure, you need to go to additional information and try to see if you've got anything that is affecting an adjustment that is going to change the figure that we have for our fixed deposit. So we can go additional information by additional information, trying to see if you've got any adjustment that needs to be adjusted for our fixed deposit. But according to the information that we're given, you see that we don't have any that is affecting our fixed deposit. So we come here, we give a description of fixed deposits. Fixed deposits. And we are saying the value that we are given for fixed deposits, we have it here. We can just try to refer back. Fixed deposits here, it's 1,200,000 here. So we can just transfer that figure, 1,200,000. So you are saying 1,200,000. And we are saying the figure for non-current assets, we're going to leave it blank, we're going to find it, we're going to come back and find it. Then from our assets, from our non-current assets, we are saying we have we have got fixed deposit, that is 1,200,000. And also we have got our fixed assets. So we are just supposed to put our fixed assets. Here we can just put here our fixed assets. Remember, part of non-current assets, we've got fixed assets and we've got also fixed deposits. So the fixed assets is the one that is in terms of a question mark. So that is the one that we are going to use as to leave also as blank here. So it means we need to find the figure for non-current assets, and also we also need to find the figure for our fixed assets. So basically that's what we have. And remember, we are supposed to close here, because if we say fixed deposit plus our fixed assets, you are supposed to get your you're supposed to get your non-current asset figure. So with that, we can just leave it. And then we go to the next part whereby we're going to your current asset. But remember, the total for current assets should come in, and we are going to list our current assets beneath here. So we go to our question and try to find out about these current assets that we have. See that we've got trading stock. In trading stock, the question mark again, which means it's also going to be found as a balancing figure. So I will just going to give a description of trading stock. And we leave it blank here. We come back to it as a balancing figure. And after that, we look for other. Remember, we are supposed to have also trade and other receivables. So we are saying we also have trade and other receivables. You can write it for, but the total space here are just aggregating as trade and other receivables. So we need to find out the calculation. Remember, we're going to start with the figures for the debtors control. So check the debtors control figure if you are given it. Net debtors control, we're given it as 950,000. So that's the figure that we're going to put first. So say brackets 950,000. And then we look for other adjustments that are part of trade and other receivables. We look for other adjustments that we can put under trade and other receivables. So obviously, if you go to the information given, let's just try to see. We can go information by information, try to see in other. So before you go to the actual information, you can just try to see in the list of balances if you get anything that can be part of other receivables. We can look for prepayments of expenses or in advance of expenses is part of other receivables, and also accruals of income is also part of other receivables. And any other adjustment that can be needed to be adjusted for, which affects elements of trade and other receivables. So we try to see that here we only have accrued expense, which is a current liability, other trade and other payables. So we can just ignore that one. Then we go to our entire formation to try to find out anything that is affecting our trade and other receivables. So here we've got rent income. We're told that rent income of 94,000 rands was received from a tenant for the period 1 March 2023 to 30 April 2024. So we know that our year is ending end of February. So it means we received rent in advance. So this is an income in advance. And it's a current liability, other trades, and other payables. So in that one, go to directors' fees. Directors' fees paid for the year about is 3 directors who received the same fee. The first director received a full fee for the current year, which is fine. Second director did not receive his fees for February. This is an accrual or owing of an expense. So this becomes part of trade and other payables. So what we include other trade and other payables. Then when the director requested the company to pay his fees for March and April. So this one was paid up to February and was also paid for March and April. So 12 months plus March and April will give you 14 months. So this one is now trade and other receivable. This is an expense, which an accrual of an expense. So basically that's what we so we need to find out the total and directors' fees for March and April and regard them as our other receivables. So basically what we are going to do, we are going to try to find out. We have got 3 directors. So this amount is the one that was paid. 1,665,000. But we have 3 directors. Very important to take note. But the first director received a full fee for the current day. So it means there's the first director does not have any prepayment, any or any accrual. Because the full fee for the current year was paid. So we have the second director now. Second director did not receive his fee for February. So it means this director only received for 11 months. And then the first one received 12 months. So 8 to 11. And then the third one now, the third director requested the company to pay his fees, and you're saying this one received also for March and April, so received 40 months. So here we add 40. So we add it like that. We're going to see that you're going to get a total of 37. So it means the money that we are being shown here, 1,665,000, is for 37 months. So we need to find the monthly fee for the directors. So we can find it by saying 1,665,000 divided by 37. And then you're going to get your 45,000. Then this 45,000 now is per month. Then we can now be able to see the in advance that we have there for March and April. Remember, it's 2 months, so I don't say 45,000 multiplied by 2, because there are 2 months. Then you're going to get your 90,000 dollars. So this is the one that was paid in advance for the director's fees, and it's a prepayment. It's a prepayment of an expense which is a trade and other receivable. So we go to edit, it increases the value for other receivables. So we come here, say plus 90,000. So we've adjusted one of it. And then from there, we can also try to see other receivables that were given in the question. Of course, we've just calculated that one. Try to remove this so that make some space. So remember, we are looking at where director's fees. Don't go to the next one, provision for bad debts. Provision for bad debts must decrease by 7,000. Very important. It also affect our trade and other receivables. So remember, I said any adjustment again that affect any element of calculating trade and other receivable can also be taken into consideration. Then here we got provision for bad debts. Remember, to get our net debtors, we say debtors balance minus the level of provision for bad debts for that current period. So this explanation is telling us the provision for bad debts has to be decreased. In other words, I will say the debtors balance minus the provision for bad debts to get the net debtors. So it means this 7,000, this figure that we have here for provision for bad debts should be reduced by 7,000. So if it's reduced, it means the difference between this and this is going to increase. In other words, it's going to increase our net debtors. And it increases our net debtors, it means it also increases our trade and other receivables. So we're going to add 7,000 again under trade and other receivables. So we come here, we add 7,000. And that's what we have. And then we try to see on the next part, we have got debtors control. Debtors with a credit balance of 9,000 must be transferred to creditors later. You can just try to comprehend that explanation. So we can see that we've got a credit balance in the debtors ledger. So this is the debtors ledger. And then there's a credit balance of 9,000 on the credit side. So obviously to remove it, you go to the debit side and enter 9,000. So by entering on the debit side of remember this is an asset. Debit side of the debtors ledger is an asset. Say it increases at the value. So it's supposed to be a positive. So here it's a positive. If you enter on the debit side of an asset, and it's a negative if you enter on the credit side. So those are as simple as that. So here we're entering on the debit, so it's going to be a plus 9,000 again. The effect on trade and other receivables. So we say plus 9,000. So that's what we have. And then we can try to see if we have got any other adjustments, any other adjustment that needs also to be done. So if you go to our trade information, we can go again, try to see if we have got still other that is affecting our trade and other receivables. But we are seeing that according to information that we are given, we have exhausted everything according to any adjustment that can affect our trade and other receivables. So we can now be in a position to make our additions by saying 950,000 plus 90,000 plus 7,000 plus 9,000. And then obviously the answer that we're supposed to get there is 1,056,000. So here we see we have 1,056,000. So basically that's what we have. So the last part we are supposed also to have cash and cash equivalents. So we are also supposed to know elements of cash and cash equivalents. Remember, cash we have got the elements of like cash at bank, cash floats, petty cash, also a part of a cash and cash equivalents. The bank balance also becomes a part of cash and cash equivalents. So basically, those are the typical elements that we're going to look for in our question. So if you come here, you'll see that We have got cash and cash equivalents in the description, and it's given as 1,500,700. So we can just try to come here, we put it as it is in brackets, 1,500,700. So obviously, we put some adjustments that we need to do. We go there, we go information by information, try to see anything that is affecting that. But they are affecting our cash and cash equivalent. We have mentioned the elements, so we go there, try to look for anything concerning our bank, petty cash floats, and any cash which transpired, any cash movement that transpired. So we go there and try to see. But if you go to information H, there's something that we need to take into consideration. On 20 February 2024, MGM Limited sold 20 laptops for cash. A trade discount of 10,000 rand was granted. The cost price was 19,000 each. That's where our basis is based on. No entry has been made. So it means we have got the selling of laptops, 20 laptops that took place, but there was no entry that was made, but money was received. So that is going to affect our cash and cash equivalent balance. It's going to increase. So we need to find out it's going to increase by how much. So we have got 20 laptops that we have, obviously, and we multiply by 90,000, which is the cost. But then this cost, we need to the selling price. This is the cost price. And the selling price is got a markup of 25% on cost. So obviously our cost is 100% plus the markup 25%. It will give you 125%. So this 125%, we can now is a representation of the selling price, but the 70,000 is 100%. So we can just maybe divide 125% by 100. Then you're going to get your 1.25. So this we are going to multiply by a factor of 1.25, multiply to 19,000 to get the selling price. So it's here multiplied by 1.25. And then the answer that we are supposed to get, after multiplying like this, you get your answer, which is going to be subject to a trade discount of 10,000 rands. So it means after your answer that you're going to get, you're going to subtract 10,000. As simple as that. So what does it mean? It means we are just simply going to say, if you say 20 times 19,000 times 1.25, you are going to get your answer is, let's just try to multiply there so that we see what do we get. You get your 475. Here, inside this bracket, you're going to get 475. So it becomes 475,000 minus 10,000. And the answer that you get there is 465. So this is the figure that you're going to put there. But obviously, we are going to summarize the working. We're going to put it inside our working for cash and cash equivalent. So we're just going to take off 465,000. So I'll come here, we get 465,000. So this is what we have. Remember, after that, we don't have any adjustment that is affecting our cash and cash equivalents there. So we can just try to add here 1,500,700 plus 465,000. And we are going to get 1,965,000 and 65,700. So that's what we have. And then with that, we cannot be able to find we cannot find our current assets, sorry, because we do not have trading stop in it. Remember, it's blank here, so we can just leave it blank again. We'll come back for that figure after we've entered everything. So having done that, if you don't have our current assets, which means you are not going to get also our total asset value, which is supposed to come here. So here we are supposed to have our total assets, which is going to be difficult to find it since we have some missing figures there. So we leave it blank again. Then we go to the second part of our balance sheet, which is going to be the equity and liability section. So we come here, we are saying equity. Equity and liability. So for equity and liabilities, we are going to start with shareholders' equity. We try to come back to our question to see if we are given the value for shareholders' equity. It's a question mark again. So, but we've got some financial indicators that we can use to find our shareholders' equity. So we come here and try to see so we've got our financial indicators that we have here that we can use to find our shareholders equity value. So we can try to find for a financial indicator that is there that involves shareholders equity. But we have our net asset value per share. Remember, the net asset value is equal to shareholders equity over number of shares, over number of shares. So we're given it is 650 cents. So you can divide by 100 cents to get it, that converted to rands, it becomes 650. So basically that's what we, so you're saying 650 is our net asset value, is equals to shareholders equity plus over number of shares that we have at the end of the year. Remember, the number of shares that we have at the end of the year, we're given the year is 1,800,000 shares were issued at 29 February 2024, which is at the end of the year. So here we're saying 1,800,000. So making shareholders equity is start with the formula. Shareholders equity is equals to 1,800,000 times 650. So that's what we. So this is how we're going to summarize it in our answer section to get our shareholders equity. We come here in brackets. We'll say 1,800,000 times 650. And when you calculate like that, you're going to get 11,700,000. So remember, under shareholders equity, we have got we are saying elements of shareholders equity. We have got cash, ordinary share capital, and retained income. So we can start with our ordinary share capital. Ordinary share capital, if you come here, right, the ordinary share capital is the one that is was the question mark. Remember, if the ordinary share capital is a question mark, it means our shareholders equity also will be a question mark. So basically, we are saying we cannot find the shareholders equity when we don't have ordinary share capital. That's why we considered it as a missing figure also. So ordinary share capital is not given again, but we don't have it, so we can leave it blank again there because it's not given there. It's given as a question mark. So we also have retained income. So we can you come here and also we have retained income. So if you find retained income, it means we cannot find ordinary share capital as a balancing figure. Remember, we say retained income plus ordinary share capital, you're going to get your shareholders equity, which is 700,000. So for retained income, we are going to take the figure that we calculated in the retained income note. Remember, we did a retained income note at the beginning of the question, and we got the final figure is 2,840,000. So we are going to take this figure as our retained income balance. So we come here. So we are saying the figure that we have is 2,840,000. And obviously, we are supposed to close. So we say 2,840,000 plus ordinary share capital, you're going to get a shareholders equity, which is 11,700,000. So to get our ordinary share capital, we're going to just simply going to say 11,700,000 minus 2,840,000. And then obviously the answer that you are supposed to get there is going to be 8,860,000. So we have found our order share capital as a balancing figure. So From our shareholders and shareholders equity, we go to non-current liabilities. So we have got non-current liabilities, but for non-current liabilities, we know that we have got one main element there, that is loan. So we go to check out about loan. We are given a loan. The loan balance is 2,750,000. That's the loan balance that we are given, 2,750,000. But if you come here, additional information, remember, whenever we see loan, we try to see if there's a current portion of loan that has to be transferred from the loan balance, and then it goes under current liabilities as short-term loan. So, which is the current portion of loan. So we go to where we've got information about loan, which is here. We are told that a fixed monthly installment of 50,000 rands to cover loan repayments and interest has to be paid over the full period of the loan. The repayment and interest for 2024 has been paid and profit recorded. Then finally, interest will decline over the life of the loan by 10% each year. So basically, we are seeing that there is a requirement for us to calculate current portion of loan. Since we are already told that interest will decline over the life of the loan by 10% each year. So basically, we are going to use the formula to find first capitalized interest by saying closing balance of loan is equals to opening balance of loan. We add interest capitalized, we subtract repayments. And then from that, we can now be able to find our interest capitalized. So when you find our interest capitalized, you are supposed to subtract the repayments total minus the interest capitalized figure that you would have found. Then you get the current portion of loan. So basically, we are saying current portion of loan will be equal to repayments minus interest capitalized. So basically, that's what it is. And we are told that the interest capitalized is going to will decline over the life of the loan by 10%. So in this case, we are going to remove the 10% there. Then after that, we subtract now between repayments minus interest capitalized. Basically, that's what we have. So we're saying after we have removed 10% from interest capitalized, the net figure, subtract it from the repayments figure, then you get your current portion of loan. So we are going to start by finding our interest capitalized. So how can we find it? We have got our information that we are given there is opening loan balance is 3 million. So here we are saying 3 million. Our open, let's just try to refer back and confirm. 3 million is the opening 2023. So we can start with our closing. Remember, we are saying our closing balance here. So let's start with the closing balance, whereby we are saying it's 2,750,000. So you come here, you say 2,750,000. It's equal to our opening balance is the 3 million now. Plus interest capitalized, we don't have it, but repayments, we can find it by saying repayments, we can find it by saying we're told that is 50,000 to cover loan repayments and interest, which is a monthly installment. So to get after 12 months, we are going to say 50,000 times 12. And you're going to get your 600,000. So here we are saying you get your 600,000. So 600,000 becomes the total repayment. So basically, you can come here with substitute there into repayments. We're saying minus 600,000. Complete like that, we can now make interest capitalized subject the formula, whereby it becomes interest capitalized is equals to 2,750,000. Negative 600 to the other side. Negative 600,000 to the other side becomes positive 600,000. Positive 3 million to the other side becomes negative 3 million. Then our interest capitalized becomes, so So we can just try to calculate it and see what do we get. So interest capitalized becomes 250,000. So this is our interest capitalized. But we are told that it will decline by 10% each year. So it means this one that we have is 100%. What it means is the 250,000 is the 100%, and then it will decline by 10%. We are left with 90%. We divide it by 100, it becomes 0.9 in a decimal. So basically, you're now saying 250,000 times 0.9, and you're going to get your 250,000. So this is the interest capitalized after the 10% has been moved. So to find out the loan, the capital portion of loan, we are saying repayments total minus interest capitalized total, and the interest capitalized total is 215,000. So basically, we are saying the repayments that we have, the repayment total is 600,000. Remember, we calculated it and we got 600,000. So we would say 600,000 minus 215,000. And you see that the figure that you are supposed to get there is supposed to be 285. So you get your 285,000 is a current portion of loan. So all your adjustments in our answer section, we are now saying the loan balance, the closing loan balance that we have. Remember, the closing loan balance is 2,750,000. 2,750,000. So we come here, we say non-current liabilities. We have got loan. And you are saying 2,750,000. Then you subtract the current portion of loan after deduction of the 10%, which you got 285,000. So subtract it like that, you're going to get your 2,465,000. So that becomes your loan balance, 2,465,000. So we can just maybe make our form more visible, 2,465,000. So that's what we have on that part. And remember, the figure that we have for our loan becomes the figure for non-current liabilities. So we can just maybe try to close there. So this is the same figure that is going to be, that is going to come there as our non-current liability. So we say 2 million. 2,465,000. So basically that's what we have. Then from there, we now go to the lower part after non-current liabilities. We are going to have our current liabilities now, which is going to be the last section. So we are saying current liabilities. Then under current liabilities, we can start with the figure for trades and other payables. Remember, we've got that description as a current liability, trade and other payables. Then we're going to start with the figure for creditors control. So our creditors control, we have 420,000. So we're going to start with 420,000. Then we're going to look for other payables. Remember, other payables, we're going to look for items like accruals of expenses, prepayments of income are part of other payables, and other adjustments that can affect any element that we have under trade and other payables. So basically, let's go item by item. But before we go item by item, we have our list of balances that we can try to pick in other payable. Accrued expense is the payable. So we are saying 9,600. We can also add it there. 9,600 is accrued expense. And then we go to other information that we are given. Obviously on this page, we don't not have any. Go to this page, we start from where the page is starting, going down, looking for other payables. So we've got 10 other payables that we indicated first of rent income. What does it say? It says rent of 94,000 was received for the tenant for period 1 March 2023 to 30 April 2024. This has been recorded. The monthly rent is decreased by it was decreased by 800 from 1 December 2023. So we need to find out, because this rent was received from a tenant for the period 1 March 2023 to 30 April. So there is we received rent income in advance. Remember, our year is ending end of February 2024, but for March and April it was also received. So it's a prepayment, or it's a we can describe it as a income received in advance. So basically that's what we have. And that's when we have such a scenario, it becomes a current liability under trade and other payables. So to find the value of the rent income for those 2 months, we need to come up with a formula there so that we can easily calculate it. So I can just maybe try to do this. So we are going to say, remember, we count number of months that we have before the decrease and after the decrease. So before, we have from 1 March 2023, 1 March 2023 to the day of the decrease, which is 1 December. So we have at the of March, April, May, June, July, August, September, October, November. Then 1 December, it was decreased. So we count how many months? 1, 2, 3, 4, 5, 6, 7, 8, 9. We have 9 months before. So before we have 9. Then after, it is now from 1 December. The of December, January, February, March, April. That is, it was received up to April. So we got 1, 2, 3, 4, 5. So we got 5 months after. After it had decreased. So our rent income, our monthly rent income, for the sake of our formula that we're going to put up, we can say monthly rent is equal to, we can regard it as X so that we can calculate it easily. Then from there, we are saying before it decreased, we had a rent of X. Then after it decreased, to be X minus 800. So we are saying before, when it was X, we had 5, it was not, we had 9 months. So we are saying 9X plus after it decreased, we had 5 months. So it's plus 5 times X minus 800, because it decreased by 800. Then from there, the answer that we're supposed to get is 94,000 that you're given. So this is the formula that we have. 94,000. Right. So from there, you can now be able to calculate your X. And from there, you can be able to find when it decreases after 800, you need to subtract your 800 from the figure that you got as X. Get the rent after the decrease. And then you can find for the 2 months that we want to take into account as other payable. So here we are going to say, if we expand our equation, it's going to be X 9X plus 5 times X becomes 5X. 5 times negative 800 becomes a negative 4,000, which is equal to 94,000. From there, you can match like terms where by saying 9X plus 5X, we're going to get 14X. And then we take negative 4,000 the other side to say 4,000. When you take negative 4,000 the other side, it becomes plus 4,000. So you're going to say 94,000 plus 4,000 becomes 98,000. And then obviously you divide by 14 both sides. You divide by 14 both sides. So obviously here it will remain as X 14 into 98,000 plus. Now the calculation that we want to make, you're going to get your 7,000. So here X becomes 7,000. So this is the rent of X, of which X we are saying is the rent before the deduction, before we decreased by 800. So after decreasing by 800, it's going to be 7,000. 7,000 minus 800. And we are going to get your 6,000, 6,200. So this is the rent after the decrease, which is applying for the month of March and April, which are outside of financial period. Remember, we are trying to comply with the matching principle, whereby we say what belongs to this year should be recorded this year, and what doesn't belong to this year should not be recorded this year. So we are just trying to find out the rent income for March and April, which doesn't belong to the current financial year, which ends end of February. So basically, that's what we have. So coming here, we now have the monthly rent after the decrease is 6,200, but we need 2 months. So we are just going to say our 6,200 multiplied by 2. Right. So if you multiply the two, you see that the answer that we are going to get is going to be 12,400. Where you get your 12,400. So this is the rate for 2 months after the rate had decreased. So it's going to apply for March and April. So this is another which is going to increase the trade and other payables. So you can come here, we say plus 12,400. So having done that, we can now be able to try to see which other one is part of other payables. We can go with our question. We can now say, if you go down, so if you go next, we've got E director's fees. But on director's fees, director's fees paid for the year amounted to 1,665,000. The company is three directors who received the same fee. Then the first director received the full fee for the current year, which he said is okay. Second director did not receive his fees for February 2024, which is in accrual, which we adjusted, which we are supposed to adjust, sorry, which we are supposed to adjust here as an accrual of an expense. And remember, an accrual of expense is part of trade and other payables. So we calculated this, if you still remember, we calculated this monthly fees by saying 1,665,000 divided by the number of scope months. Second director said not to see for February, so that we 11 April, so get 14. So to say 14 plus 11 plus 12, we got 37. We divided there and got 45,000. So we are saying this 45,000 is going to apply for fees for February, which was not paid. So it becomes an accrual of 45,000 that we are supposed to add here. So this is what we have. And then we try to see any other, we can go with our question, try to see any other table that we can try to see there. Provision for bad debts is not part of that, but the data with a credit balance of 9,000 must be transferred to the credit ledger. So we said it was a credit balance in the debtors ledger of 9,000, is indicated here, 9,000. So to transfer it to the creditors ledger, we are not going to debit it in the debtors ledger. And then it's going to come to the creditors ledger by putting it on the credit side, 9,000. And by putting it on the credit side, remember the creditors are part of our liabilities. And when debit is a negative. So we are crediting, so it's going to be a plus 9,000. So here we come in, it will add our 9,000. So this is what we have. So we can now add to get the total for traded other payables by saying 420,000 plus 9,600 plus 2,400 plus 45,000 plus 9,000. So the final answer that we're supposed to get would be let's just proceed. What we get. So we can try to add there and see what actually do we get. So the total will be 496,000. So here we have 496,000, representing total for trade and other payables. So obviously, but we have this figure for current portion of loan that we've transferred from the loan, we subtracted it. It's supposed to come here as current portion of loan. We are saying it's 285,000. And also, we also have the issue of shareholders for dividends. Remember, the final dividends will automatically come in the balance sheet as our shareholders for dividends under current liabilities. Remember, we calculated the final dividend in the retained income note, it got 1,080,000. So we are just going to take that figure and put it under our liabilities as shareholders for dividends. And the figure that we have is 1 million. 1,080,000. And then from there, we can also be able to find, remember, if you go to our additional information, we've got the one for SARS income tax. And obviously, we need to find the balance at the end. Obviously, balance at the end is there is going to be an outstanding balance for tax, which we are going to regard as a current liability. So basically, when it comes to tax, you can also provide it, present it in the form of a T account whereby you've got your SARS income tax. So you can simply have your SARS income tax. Whereby we are saying SARS income tax, whereby we are saying the balances that we are given SARS income tax for the previous year indicates a credit balance of amount 80,000. So basically, it's a credit balance as simple as that. So we can just treat it as a credit balance. So we come here and we are told that it's 80,000. So we come to the credit side, we've got 80,000. And then we are also told that tax paid amounted to 628,000. Remember, tax paid comes on the debit side. So it's 628,000. And then we also try to see the other figure given. Income tax for the year amounted to 648,000. Income tax for the period comes with credit side, which is 648,000. And obviously, the balancing figure now will come, if we add there, see that the balancing figure is going to come on the debit side. It's going to come early for the debit side. So basically, to get this figure, we are going to say 648,000 plus 80,000 minus 620,000. In other words, we are saying to get this one, we're going to say this one plus this one minus this one. That's what we have. So calculate like that, I'll see the figure, which will be the balance at the end. So this is a balance CD. And when it's a balance at the end on the debit side, it's an accrual. It's an accrual CD, which the BD is supposed to come on the debit side below the double lines. But if it is balance CD on the credit side, it's going to be in advance at the end. And when we have such a scenario, it means that balance was supposed to be under current assets as a as income tax, as SARS income tax under current assets. So basically, we are saying an accrual of SARS is under current liability. Then in advance of SARS income tax goes under current assets. So basically, as simple as that. So this is what we have. So we go to another section which is summarized working. Is our SARS income tax. Description here was saying SARS income tax. Then in brackets, we summarize the working whereby we say 648,000, 80,000. Then we subtracted 628,000. And we got 100,000. So this is what we then from there we can now close to find our total figure for current liabilities, whereby you're saying 496,000 plus 485,000 plus 1,080,000 plus 100,000. And the final figure that we're going to get for current liabilities is 1,961,000. So it's 1,961,000. So remember, we have the figure is supposed to come in, it's going to be total equity and liability. So here we are saying total equity and liabilities. And then obviously this figure, we are going to add our shareholders' equity plus our liabilities. Come here, we have got those figures Here we are saying the figure that we have for shareholders equity is 11,700,000 plus the figure for non-current liabilities 2,465,000 plus the figure for current liabilities 1,961,000. So we add the three, this one plus this one plus this one. And then the total becomes total equity and liabilities is supposed to come here. And if you calculate very correctly, you're going to get your answer is 16,156,000. 16,156,000. So this is what we have on the lower part. So remember, the balance sheet depicts the accounting equation, which says assets is equals to owner's equity plus liabilities. So the part of owner's equity and liabilities, the one that is being represented by 16,126,000. So it is equal to the figure for total assets. So that is the same figure that we are going to carry, this figure, we're going to carry it and put it here is our total asset figure. So we are now going back to calculate the other remaining balance. So here we are putting the same figure, which is 16,126,000. Then we go up. The figure for current assets. We can now try to find the figure for current assets. Is if you don't have the figure and don't have figure for non-current assets. So obviously, we need to find one of the totals so that we can be able to get other balances as balancing figure. So we go to our question and try to see about information about the ratios. The given current ratio, this can be can lead us to the figure for our current assets. It's equal to current assets is to current liabilities. So basically, we are saying the current liabilities we already have them, and the ratio is 2.5. So you can easily find it. So basically, we are saying if we say so, this is the same as putting it down in form of fraction, same as saying current assets over current liabilities. It's equals to 2.5. As we are given it here is 2.5. So our current liabilities, we go to our other section and try to see the figure that we have for current liabilities. We are given it as current liabilities 1,961,000. 1,961,000. So we are saying current assets over 1,961,000. It's equals to 2.5. So we are now saying to make current assets example, the formula there is going to remain as your current assets equals to 2.5 times 1,961,000. And then get your answer is 4,902,500. As simple as that. So we go and summarize in our other section. We go back to our other section and we are here. We are saying our current assets total in brackets. We're saying 2.5 times 1,961,000. And we say the total that we are getting is 4,902,500. 4,902,500. So from there, we can now be able to find out the figure for non-current assets. So remember we said non-current assets plus current assets is equals to total assets. For which we are given the figure for total assets is 16,126,000 here, total assets, 16,126,000. So we are saying if we say non-current assets plus current assets, which is 4,902,500, is equals to the total for assets, which is 16,126,000. So to get our non-current assets, as a chart of the formula, we need to 16,126,000 minus 4,902,500. And you are going to get your figure for non-current assets is 1,000,000 for non-current assets is going to be 11 million, 220 current assets. So basically we come here, we see 11,223,500. So finding the figure for non-current assets, we can simplify the figure for fixed assets by saying 11,223,500 minus 1,200,000, and you're going to get your answer is 10,023,500. So that's our figure for fixed assets. But we will still have our trading stock is missing. So basically, to find the figure for trading stock, we are simply going to say 4,902,500 minus 1,056,000 minus 1,965,700. And then you get your balancing figures for trading stock, which is going to be your 1,880,800. So this is what we have. So this becomes the last part of our balancing figure. So I think we have completed all our missing figures from the upper part of our balance sheet. So this is what we've guys in the preparation of the balance sheet. Remember, we started by preparing the retained income note, and then we finally finished with the preparation of the balance sheet. So thank you for listening, and please let's not forget to subscribe and share to our channel. More typical examination questions are going to be uploaded on this channel. So let's get notified, let's subscribe, let's turn on the notification button so that when we have new uploads, you get notified. Let's meet again in the next video. As for this video, I'm signing out.